Good morning, student. Welcome you all once again in the second and the last lecture on Ind AS 38 intangible assets. So, students, we started this Ind AS 38 in the last class, and today we'll complete this standard Ind AS 38 intangible assets. So, let me quickly revise what we have discussed in the last class, and then I'll take over in the today's class. So, in the last class, we have discussed that this standard is applicable in the accounting of all the intangible asset except some negative list was given. Means, for example, deferred tax asset, for example, financial instruments, inventory. So I mean to say software, which is in the normal course, in the ordinary course of selling, then it will be considered as an inventory, not as an intangible asset in Ind AS 38. So there are few items which are not covered under Ind AS 38, while those items are intangible in nature, but still it will be covered by the respective standard, not by Ind AS 38. Other than those items, all intangible assets are covered under Ind AS 38. Then we discussed the definition of intangible asset, which is what? What is the definition of intangible asset?
So it is an identifiable, non-monetary,
Yes.
having no without physical substance.
Yes, it is an identifiable, non-monetary, without physical substance. It's an identifiable asset. It is an identifiable non-monetary asset without having physical substance. Without physical substance, right? Very good. Then we discuss the recognition criteria. So what is the recognition criteria? Recognition criteria is future economic benefits should be probable and cost can be measured reliably. And the third one also. What was the third criteria? It should meet the definition of intangible asset. It should meet the definition of intangible asset. Okay. Yes, very good. So these were the three criteria for recognition of an item or an asset as an intangible asset, that future economic benefits should be probable, cost can be measured reliably, and it should meet the definition of intangible assets. Very good. Then we discussed that intangible asset has to be initially measured at cost. It has to be initially measured at cost. Okay. And we also talk on various aspect of acquisition of intangible asset. We also discussed that how intangible asset can be acquired, right? And there are various ways by which intangible asset is acquired. For example, there is a separate acquisition. So if intangible asset is purchased, if it is acquired, purchased, in that case the cost of intangible asset is equal to purchase price plus non-refundable taxes plus import duty minus trade discount and rebates plus directly attributable cost like employee cost, consultancy cost, installation cost, registration cost, legal fees. Okay. So these were the costs which is going to be capitalized as an intangible asset in case of separate acquisition. Friends, the dismantling cost is not there in intangible asset like it was there in tangible asset. Why dismantling cost is not there?
Without the physical presence.
Because it is not having a physical substance. So one which is not having a physical substance, then how it is dismantled, right? So that is why the third thing is not there in case of separate acquisition. And friends, we discussed what cost is not a directly attributable cost, like cost of inauguration, cost of launching a product, right? So overheads, administrative overheads, initial operating losses. Okay. So these costs are not the directly attributable cost, and these costs are charged to P&L when it was incurred. Then friends, we discussed when intangible assets are acquired by way of business combination, means you are acquiring a company and then you are getting some intangible assets. So standard says that in that case, those intangible asset has to be measured at fair value. And standard also says that if you are paying to acquire a company, whatever is the value of the net assets, the differential should not only be goodwill. You need to see if there are more intangible asset, even which is not recognized by the acquiree, doesn't matter. So जिसने कंपनी बेची है उसने उन इंटेंजिबल एसेट को अक्वायर नहीं किए, उसने रिकॉग्नाइज नहीं किया था, बट Why you are paying extra? You are paying extra because you are forcing some intangible asset, forcing some asset which will give you future economic benefit, and that is why you will capitalize that. So we did one question and where we recognize sole distribution right and trademark as an intangible asset. You remember that question? Yeah.
Yes, sir.
And
Yes, sir.
friends,
That's the Earth and Moon limb. Sir,
yes.
sun.
Yeah. So friends, if there is some intangible asset which is arising in terms of business combination, you need to measure those intangible asset at fair value, and the balancing figure will go as a goodwill. Then we discuss government grant, that when the government is giving intangible asset free of cost or at a concessional rate. Friends, in that case, standard says that either you have to recognize intangible asset and government grant at fair value, or you can recognize intangible asset and government grant at nominal value. Okay. And if you are recognizing at nominal value, if there is any directly attributable cost which has been charged for an intangible asset, you can add the directly attributable cost, which is the cost incurred to get the intangible asset ready for use. Okay. For example, registration cost, for example, installation cost. So you can capitalize those intangible asset at those costs, right? So if it is at fair value, what accounting entry you need to pass? Intangible asset account debit to government grant liability. And intangible asset you need to amortize over a period of over which the future economic benefit will be received, and government grant liability will be amortized in the same manner in that period, only applying the matching concept. Okay. If it is at nominal value, government is giving you 100% free, then it is 1 rupee. Okay. Intangible asset account debit to other income, 1 rupee. If you are incurring some cost, then 1 rupee is not required. For example, government is giving you free of cost, but only charging registration cost of 50,000 rupees. In that case, intangible asset account debit to bank 50,000 rupees. That's all. Okay. Fourth, if the government is giving you some licenses which is costing 50 crores, but government is giving you at 5 crore. In that case, intangible asset account debit to bank account 5 crore. If you are applying nominal cost approach, all right. But if you are applying fair value approach, then intangible asset account debit 50 crore to government grant 45 crore to bank 5 crore. Right? Is that clear or not clear?
Yes, sir. Clear.
अगर concessional rate पे, if government has given you concessional rate, if government has given you intangible asset at concessional rate, then if you have to apply a fair value approach, then at what value you will capitalize intangible asset?
Asset given.
At fair value.
At fair value. Fair value means full value, right? At fair value. Okay. But in that case, you have paid a part amount. You have paid a part amount. Okay. You have paid partly. So for example, in my case, 50 crore is the fair value, market value, but government is charging you 5 crore. What entry you will pass if you are applying fair value approach?
The intangible asset,
Account
government
debit, yes.
grant,
Yes.
bank.
To bank, yes. So intangible asset 50 crore, government grant
45 crores.
45 crore, and to bank 5 crore.
5 crores.
If you are applying a nominal value approach, then what is the accounting entry?
So intangible asset to bank.
Simple. The cost which you have paid, intangible asset to bank 5 crore. जो एक्चुअल कॉस्ट है वो तो आप करोगे ना. Intangible asset to bank 5 crore. Yes.
Yes.
Right? Is that clear? Internally generated goodwill, we discussed, it is not capitalized. It is prohibited, not recognized, not capitalized. Exchange of asset. What is the accounting in case of exchange of assets?
The asset, the value of the asset which is given out will be intangible asset will be recognized on that value.
Yes. So basically the consideration given is the value of the intangible asset, correct? So
Yes.
what is the value of intangible asset acquired? So we are talking about intangible asset acquired, correct? Acquired means जो आया. we are talking about intangible asset which is going to be recognized and capitalized, correct? So at what value? So the value is the value of the asset we have given as a consideration. Okay? Fair value of the asset given up if this transaction is having a commercial substance. But what happens if the fair value of the consideration given, fair value of the asset given is not known? Then
The fair value of the asset obtained.
fair value of the asset acquired. If it is there, then you have to record at that value. What happens if fair value asset given up as well as fair value of asset acquired, both are not given? Then
we will take the carrying amount of the asset.
given up,
WDV.
right? Yes. Then
WDV
we
of the
will take
asset
the
given up.
carrying amount. We will take the
Carrying amount
WDV of the asset given up. Okay. Very good. So friends, I have done few questions also that day, right? So I have covered the revision. I have done the revision in last 11 minutes for the last class. Now let's move to the today's class. Friends, now we need to talk about internally generated intangible assets. Internally generated intangible asset. In case of pharma industry, right, when COVID came, so what was the challenge behind the pharma companies? What was the challenge? When COVID came, what was the challenge behind the pharma companies?
To produce the drug within the short span of time.
To produce the drug, to produce the vaccine, which can fight with the coronavirus within a short span of time. Okay. That was the challenge, correct? That was the challenge. Now, friends, the pharmaceutical company had done a lot of research. Okay. Lot of research to find out what can be the alternative, what can be the composition, what can be the drug which can fight coronavirus. Okay. So they are putting a lot of permutations and combinations, right? They're doing a lot of permutation combination to ensure that what can fight with that virus. So they were doing a lot of research. They're scientists, they're doctors, they were doing a lot of research on the animals, on few set of human beings, right? That whether we will add sodium into nitrogen, salt into this, that. So, but once they find that, okay, so now we got the right salt, means we are moving into the right direction. And when we combine X chemical with Y material, probably it will give us a success. Then they started working in that direction, and once it has been ready, so they will have a future economic benefit. Correct? They will get it patented, and they will either sell the formula or they will sell the medicine also. Right? They will get the future economic benefit. Likewise, many companies, they produce the software, the processes which gives them immense amount of future economic benefit, and they get it IPR, intellectual property right, patented. Have you heard about these aspects? Have you heard about these terms?
Yes.
Yeah. And
Yes,
whatever
sir.
I'm telling you in a layman language, are you able to appreciate and understand?
yes, sir. Very much appreciated, sir.
Yeah. Everybody is able to understand what I'm saying?
Yes, sir.
Okay, very good. Yeah. So friends, when the company is doing a lot of expense, when the company is incurring a lot of money, of course, the company need to check whether we need to expense it off or whether we need to capitalize. And if the expenditure gives you a future economic benefit and the cost can be measured reliably, of course, you need to look at recognizing and capitalizing that item as an intangible asset. So friends, for internally generated intangible asset, there are two phases. Research phase and development phase. What is a research phase? What is a research phase? Research phase is a phase where you are acquiring a knowledge. Development phase is a phase when you will apply your knowledge. So research phase is an acquisition of a knowledge, and development phase means application of a knowledge. So being a CA final student or a CA student, whatever you guys are investing, your time, your effort, your money, what is that? That is an expense or that is an intangible asset?
Acquisition of
Research phase.
So if I will apply this internally generated intangible asset on you guys, how it will get fitted in a right manner? So let me tell you, you all are students. You are investing your time, your effort, and your money. Okay? Why? You are acquiring a knowledge. You know that once we become a chartered accountant, we will be able to earn a good money. We will become a professional. Our career will set. We will open an office. We will sign balance sheet. So you know that once we become a chartered accountant, we will get the future economic benefit for the lifetime. Right? So whatever you are incurring as an expense, you are not incurring only for a period of a time for, let's say, less than 1 year or only for a 1 year. But at the same time, the point is, what you are doing right now, are you acquiring a knowledge or are you applying a knowledge being a student?
acquiring the knowledge, sir.
Being a student, we are currently acquiring the knowledge. We
You
are
are
in research
acquiring a
phase.
knowledge, you are learning, you are taking coaching, you are taking tuitions, you are doing sums, you are solving problems, you are acquiring a knowledge. Every day you are acquiring a knowledge, right? You are turning a bucket of water into an ocean, right? So bucket of knowledge into an ocean of knowledge. So once you have a knowledge, right, then you will appear in exam. Once you pass your exam, so till the time you will not clear your exam, can you say that I will be able to receive the future economic benefit as a chartered accountant?
No, sir.
No.
No. So the point is, right now you are a student. This is your student phase. Yeah, right? Your articleship is going on. Your articleship is 3 year in the old syllabus. 3 year, okay? And your student phase is going on. You are learning knowledge. Now you have appeared for a CA final examination, right? You clear your CA final exam. The result came and you clear your CA final exam. Your articleship for 6 months is still pending. Right? But you become CA. You clear the exam. And you know after 6 months, you will complete the articleship also. Friends, tell me, up to this level, were you certain that you will become a chartered accountant?
No.
Can you write on the stamp paper? While by heart, at the back of the mind, probably you were clear that yes, my paper went very well, and I have done a lot of hard efforts. So you were 99%, 95%, you were clear that yes, I can crack this exam. I will crack this exam, right? But can you write with your blood? Can you write 100% that yes, I will be a chartered accountant in this attempt? No one. Probably if tomorrow, if I will appear in the exam, I don't know whether I will pass or I will fail, right? But the only point is I have to give my best shot, right? That is within my control, right? Okay, that is within my control, and that I will do. So the point is, up to this phase, when you are applying your knowledge, when you are acquiring your knowledge, this is known as a research phase. But once you clear the exam, now you are clear that yes, you become a chartered accountant. The only thing is you have to complete your articleship, and it will be completed by passage of time. So friends, from this date, what phase have started from this date? Development phase has started from this date. From this phase, development phase, from this date, development phase has started. So friends, all the internally generated intangible asset has to be classified into two parts: research phase, development phase. Research phase is a phase where knowledge is acquired. Development phase is a phase where you are certain that yes, now we are in the right direction. Now we will be able to receive future economic benefit. So from that date, you can say development phase has started, and now you will be in a position to apply your knowledge as a chartered accountant. Right? So are you clear on this research phase and development phase? Yeah? Are you clear?
Yes.
sir.
So there are two phases in internally generated intangible asset: research phase and development phase. Research phase is a phase where knowledge is acquired. Development phase is a phase where knowledge is applied. So standard says that when you are doing a research, you are doing a research on a lot of permutation and combination, right? So whatever money you have spent in research phase, it will be charged to P&L. It will be charged to P&L because it is a sunk cost. Okay. So whatever money you have spent, it has to be charged to the P&L. What about development phase? Standard says that the amount which you will incur after hitting the development phase, that amount will start getting capitalized as a capital work in progress, right? In intangible asset, are we using the word capital work in progress? Capital work in progress is used for tangible asset. So what is the nomenclature used for intangible asset under development?
Intangible assets under development.
Intangible asset under development, right? So नाम अलग है, काम वही है. Okay. So intangible asset under development. It is a capital work in progress for intangible asset. Okay. So development phase start होने के बाद आप क्या करोगे? Development phase start होने के बाद you will start capitalizing. Okay. Sir, how will we be able to know that the development phase has started? I will tell you. But before that, let's discuss this. Example, A Limited has started doing a research for a medicine on 1st April 2019. A Limited has started doing a research for a medicine. The company has spent 50 lakh till 31st May 2021. On 1st June 21, the company has met all the criteria for development and spent rupees 30 lakh more till 31st March 2022. Explain what will be the treatment for the above 80 lakh rupees. बताओ क्या होगा? Total money spent is 80 lakh. Up to 31st May 2021, 50 lakh rupee has been spent. On 1st June, development criteria has been met. Okay. And 30 lakh has been spent after meeting development criteria. Tell me, what is the research phase expense and what is the development phase expense?
The 50 lakhs is the research phase
50 lakh
expense.
is the research phase and it will
30
be
lakhs.
put to P&L as an expenditure. And when it meet criteria after 31st March, 30 lakh will go into we will capitalize it as an intangible asset.
After 31st May. So 1st April 19 to 31st May 21 is a research phase. From 1st June, development phase has started. So 50 lakh has to be charged to P&L. And 30 lakh will start getting capitalized as intangible
Asset work
under development. Okay. If a company is not able to identify between the research phase and development phase, then treat it as a research phase and charge the expenditure to the P&L. Okay. For example, the company is not able to know, the company is not certain that whether research phase is going on or development phase has started. In that case, if there is any doubt, then treat this as a research phase. And if it is a research phase, where the amount will go? P&L or capitalize?
P&L. We will expense it out.
P&L.
P&L expense it out. And friends, even even the standard is so stringent, it says that, for example, you are doing some research, okay, on some intangible assets. And it will take a lot of time. It will take 3 years, for example. In the first year, you have done some research. In the second year, you are able to identify that my research phase was started even in the last year itself. From last year, from 1st October, my research phase was started. But last year is already over, right? In last year, you spent 1 crore rupees and 60 lakh rupee you have spent in the first half year and 40 lakh rupee you have spent in the second half year. Okay. And when you move to the second year, you have realized that my development phase was started in the last year, in the second half itself. From 1st October, my development phase was started. Friends, what you have done in the last year, you have charged entire 1 crore rupee in the P&L, right?
Yes, sir.
But ideally, what should have been done?
The remaining amount of part 2 should be
Yes.
capitalized.
So basically 60 lakh spent in the first half has to be charged to P&L, but 40 lakh spent in the second half has to be charged to has to be capitalized. है ना? It has to be measured, it has to be recognized as an intangible asset under development. Friends, standard says that if you have recognized the intangible asset expense, intangible asset outflow, if you have recognized any money incurred as a research phase, as a research expense, right, in the previous year, in the previous period, you cannot reverse that in the subsequent period. You cannot reverse. Means you will not correct this. Means whatever accounting treatment has been done, it has been done. Okay. You will not capitalize it in the current year by correcting the last number. Okay. So that is what standard says. So in your examination, if question will tell you like this, A Limited is developing a formula since 2019. Okay. A Limited is developing a formula since 2019. The company has made 10 lakh rupees expenditure every year. In 2024, the company has found that the development phase was started in 23 itself. But till last year, the company has treated that expenditure as a research phase expenditure and charged the expense to P&L. Suggest the correct treatment. What to do? Tell me. In 2024, the company has realized that the development phase was started in the last year. But up to last year, what this company has done? This company has treated whatever expenditure incurred as a research phase expenditure and charged to P&L. So now in 2024, should we correct that?
No.
No, sir.
No. This is a specific thing which standard has told you that because that you will not correct that. Whatever you have done till last year, it has been done. It has been done. Okay. You are not required to reverse that. You are not required to reverse that. Okay. So friends, the expenditure charged on a research phase shall not be reversed in the future period. It shall not be reversed in the future period. Right? Okay. Is that clear or not clear?
It's clear, sir.
It's clear? Very much clear?
Yes. Yes, sir.
Very much clear?
Yes, sir. Very much clear, sir.
Okay. Now,
Clear,
friends,
sir.
so this is kind of a very subjective thing, right? And how do we be able to know? For example, the company was doing a research for the COVID vaccine. How come we able to know that yes, from this date, the development phase has started, right? How come we able to know? Because up to the development phase, starting of the development phase, when it is a research phase, you have to charge all the money spent to the P&L. But when the development phase starts, you have to capitalize it. So how will you be able to know that development phase started? Standard says that development costs are capitalized if the entity is able to demonstrate, or it says that development phase will start when it will meet all the condition, when it will meet all the criteria, For example, when there is a technical feasibility, to complete that project, when there is a technical feasibility means at a point in time when you are able to certain that yes, this project is viable, this formula for creating a COVID vaccine is technically feasible to complete. Okay. There is an intention to complete the intangible asset and use or sell it. At times, when the company do a lot of research and it took a lot of time, lot of years, then the entity will say that, okay, now I don't have a stamina to do more research. Now I'm leaving it. Okay. So there must be an intention to complete the intangible asset and use or sell it. Okay. So I am telling you at what time, at what date, when the development phase will be treated as a start of development phase. When that period will be converted from research phase to development phase. Number one, there must be a technical feasibility of completion. The intention to complete must be there, right? Ability to use or sell the intangible asset must be there. What is meant by ability to use or sell? Friends, all the private limited company were doing a lot of research on COVID vaccine. And at a point in time, they become certain that yes, now we got the right formula. Now we have to work in this direction. Okay. So for example, when they become certain that yes, we will get the success, the government told that private players are not allowed to manufacture or sell COVID vaccine. Friends, in that case, whether they will be able to use or sell the intangible asset means whether they will be able to use those formula to manufacture the machine and sell it, or will they be able to sell the formula for COVID vaccine if government has banned that?
No.
Answer is no. So you have to check whether the entity, the company has the ability to use or sell the intangible asset. Number 4, how the intangible asset will generate future economic benefit. Right. For example, when these companies were doing the research and development for COVID vaccine, so they have, what they have projected, that if we will manufacture the vaccine and sell, in India, there are 140 crore of population. Okay. So at least if we will be able to sell 25 crore vaccine, so this is my cost, this is my revenue, and this will be the time frame. So they are certain that their future economic benefit was probable. They were certain that they will be able to generate future economic benefit. Adequate technical, financial, and other resources to complete the development. You need to check whether they have adequate technical, financials, and other resources to complete the development, right? When it took a longer period, ultra longer period, at times the company run with the cash crunch. They don't have adequate resources to complete the development, right? So do they have doctors, scientists, money to complete the development, right? You need to check that. Ability to measure the expenditure attributable to the intangible asset means cost can be measured reliably. So these two conditions, future economic benefit is probable and cost can be measured reliably, it is always there. In addition to these two conditions, you need to check whether there is a technical feasibility, intention to complete is there, ability to use or sell must be there, and adequate resources are available, right? When these conditions will be satisfied, all the conditions will be satisfied, you can say that development phase has started. You need to learn this. And for your learning, I have made it simple. And I have called it as a pirate. What is the full form? What is meant by pirate? What is meant by pirate? क्या मतलब होता है pirate का? Pirates of the Caribbean.
Thieves of the
Thieves,
ocean.
It's
the thieves of the ocean.
the thieves of the ocean.
Dacoits.
The thieves of the ocean. And you know, the thieves of the ocean is a development phase. Who is the thieves of the ocean? The thieves of the ocean is a development phase. The thieves of the ocean is a development phase. P stands for probable future economic benefit. I stands for intention to complete and use or sell the asset. R stands for resources are adequate to complete the asset. A stands for ability to use or sell the asset. T stands for technical feasibility. E stands for expenditure can be measured reliably. Right? When these all conditions are met, then you can say that development phase has started. Do you find this pirate useful?
Yes, sir, very much useful. But I see there are two things are common, sir. It is always the problem of that future economic benefit is things, and expenditure can be measured reliably.
Saminathan, you are absolutely right, and let me tell you, any asset which you are going to recognize, what you are doing here, so when it is research phase, you are taking it to P&L, means you are not capitalizing, you are not recognizing it as an asset. But when you are calling it as a development phase, what you are doing? What you are doing? You are
calling it as an asset.
You are calling it as an asset. When you are saying it is a development phase, you are starting capitalizing the amount, means you are calling it as an asset. So on this planet, there are always two recognition criteria will always be there whenever you capitalize any asset. What two recognition criteria? Future economic benefits should be probable and cost can be measured reliably. These two criteria will always be there. In addition to these two criteria, there may be some more criteria, but these are the two basic criteria which will always be there. Okay? Right. Great. Friends, now quickly discuss this question. X Limited is developing a new production process, and on 31st October 2016, it has been able to demonstrate that it is likely to enjoy future economic benefit from the research. Okay? When?
Sir, it might be screen has been freezed.
Okay. Is it okay now?
Yes, sir, now it's okay.
X Limited has been developing a new production process, and on 31st October 2016, it has been able to demonstrate, just a minute, it has been able to demonstrate that it is likely to enjoy future economic benefit from the research. Okay. So up to 31st October 2016, whether it was a research phase or it was a development phase, up to 31st October 2016,
31st time research phase.
it was a research phase. Okay. And on 31st October 2016, they were able to demonstrate that yes, my development phase has started. Okay. It incurred 50 lakh. It incurred 50 lakh on this account till 31st October 16 and 24 lakh afterwards up to 31st March 2017. So what is my research phase amount and what is my development phase amount?
Research phase amount is at 50 lakh till 31st 10/16 and it's 54 lakh development phase fees.
Yes. So research phase is 50 lakh and development phase is 24 lakh. It means you have to recognize the asset for
Development phase.
development phase. So you have to recognize the asset for development phase, okay, which is 24 lakh. Now, as on 31st March 2017, it estimates the recoverable amount of know-how embodied in the process at 22 lakhs. So on the reporting date, the recoverable amount is 22 lakh. And what is the value of the asset? What is the value of this asset?
24 lakh.
24 lakh. Intangible asset value is 24 lakh, but recoverable amount is 22 lakh. So do we need to consider this 22 lakh?
No, sir,
Yeah.
because that the development phase, once it is completed fully, then only we can see any impairment or anything else there.
Saminathan, this is where the students make a mistake, right? So impairment is not only applicable to complete asset, impairment is also applicable to work in progress asset also. It is also applicable to capital work in progress. It is also applicable to intangible asset under development, right? For example, you are constructing a building, okay? And you have spent around 50 lakh in the construction of a building. You have spent around 50 lakh on the construction of the building. Okay? And you know that you need to spend 1 crore more to complete this building. You know that. But when you spend 50 lakh rupees, you know that whatever expense I have incurred, because the market prices has substantially gone down, and whatever spent I have done, 50 lakh rupees, the value of this spent is only 30 lakh rupees. Okay. So today, if I will sell this under construction building to someone else, the price which I have incurred and the price which I have paid to acquire a land to make a construction, so of course the market value is much lower than the price I have incurred. In that case, even that capital work in progress is going to be impaired. That is also an asset now. The only thing is, it is not a complete asset. It is incomplete asset. It is WIP asset, but it is an asset. Okay, right? So friends, in this case, what will happen? 50 lakh is the research phase to be charged to P&L. 24 lakh is a development expense. You have to record an intangible asset under development, means intangible asset. And 2 lakh rupees impairment loss to be debited and asset to be reduced.
Sir, I have one query. If that recoverable amount is 26 lakhs, then sir?
Then you are not required to do anything because for capital work in progress and intangible asset under development, revaluation model is not permitted.
Okay.
Right. Yes.
Okay.
Yes. So generally, these under progress assets, CWIP or intangible asset under development, these are the same thing. You understand, na? Like for PP, you are calling it as a depreciation. What is
Yes,
the
sir.
word for intangible asset?
It's
Amortization.
Amortization. But concept is same, right? Concept is same. So depreciation is equal to cost of PP minus residual value divided by useful life. Okay, if residual value is there. And what is amortization? Cost of intangible asset divided by useful life. Generally, in intangible asset, residual value is not there. Or if it is there, for example, you will be able to sell it. So again, same cost of intangible asset minus scrap value divided by useful life. Okay. So likewise, for PP or tangible asset, you are using the word CWIP, capital work in progress. For intangible asset, you are using the word intangible asset under development, right?
Okay, sir. If the once the sweep is completed, then if the recoverable amount is higher than that carrying amount, then we can recognize that profit.
You can recognize the profit provided if you have opted the revaluation model.
Yeah, revaluation model. Yeah.
Otherwise, tell me one thing. You are living in a house, okay? You have the land or a building or a flat, and your parents or your family has purchased that, and at a price on which they have purchased versus the price which is there in the market. Of course, the market price is much more than the price at which your family is purchased the house, flat, land, whatever, right? So generally it happens like that only.
Yes, sir.
Yeah. So your price is more than the cost, your market value. But in your balance sheet, when your parents is preparing their balance sheet, so are they taking the increase every year? Answer is no. Likewise, companies are not taking the increase every year. While the value has increased, you can see the balance sheet of big listed companies. They have a lot of chunk of land, right? But their land is sitting in the balance sheet since ages for the same price, for the same price. Why? Because they have opted a cost model, right? So what I'm trying to say that, having said that, market value is more than the cost price for tangible asset or intangible asset, for PP or intangible asset. It does not mean that you will be automatically record the revaluation surplus, right? The revaluation surplus will be recorded only when the
When
revaluation model has been
evaluation model is opted.
Yes, only when the revaluation model is opted. Okay, clear?
Yes,
Sir,
sir. Very much clear, sir.
is it like the basic concept that if we are in a lookout of that we are going to lose something in the value, we are going to recognize it. And if we are not going to lose something, we are having an appreciation, we won't recognize it.
Sorry, can you please come again? Can you please repeat?
Sir, it is like the basic logic that if we are losing the value anywhere, we are going to recognize it. And if
Yes,
we are not losing, we are gaining something, we won't recognize it.
yes. So basically, it is a conservative concept.
Conservative concept.
Yes, law of conservatism, that yes, if there is a loss, if there is a losses and expenses, you need to recognize. But if there are gains, and you can recognize the gain also. But the point is, if you have opted for a revaluation model. Okay.
Okay.
Yeah. So the concept of revaluation model is there in PP and in intangible asset both. In both it is there. So, but the only thing is you have to opt for that and you have to do all those disclosure relating to revaluation model. So can we do a question from ICAI study material?
Yes, sir.
So this question is from ICAI study material. Okay, and very important question. X Pharmaceutical Limited seeks your opinion in respect of the following accounting transaction. Acquired a 4-year license to manufacture a specialized drug at a cost of rupees 1 crore at the start of the year. Production commenced immediately. So acquired a 4-year license. So this license was acquired. Cost of the license is 1 crore and it is for 4 years. What is the treatment of this license?
It's an intangible.
Intangible
Should
asset.
be capitalized.
Yes, it is capitalized as an intangible asset. It is capitalized as an intangible asset. Okay. This license has to be intangible asset. Yes. And what is the logic for 4 year? Any use of this 4 year?
Sir, for amortization purpose.
For amortization purposes. Okay. So this license cost of 1 crore has to be amortized over a period of 4 years. Also purchased another company at the start of the year. So the first one is talking about separate acquisition. The first one is talking about the purchase of intangible asset. What second one is? What is the second one?
It's a business combination. It's purchase.
Business combination. Business combination. So also purchased another company at the start of the year. As part of that acquisition, X Pharmacy Limited acquired a brand with a fair value of rupees 3 crore based on the sales revenue. So this company has acquired a brand. And what is the fair value of the brand? 3 crore based on the sales revenue. And when you acquire a company, when you do a business combination, the intangible asset has to be measured at fair value. The life of the brand is estimated at 15 years. What is the use of this 15 year?
For amortization again.
For amortization, yes. Third, okay. So in this case, you have to recognize this intangible asset at 3 crore rupees and you will amortize over a period of 15 years. Third, spent rupees 1 crore on an advertisement campaign during the first 6 months. Subsequent sales have shown a significant improvement and it is expected that this will continue for 3 years. What is the treatment?
It will be expense to profit and loss.
So they have spent a huge amount on advertisement campaign and they have also seen the results. They are getting the results also. And they are expecting They are expecting that it will continue for 3 years. So let me influence you guys and let me check what is your answer.
It will still be
Actually,
profit
is
loss.
trapping us. 3
Sorry,
years.
can you please speak one by one? Yes. Yeah.
Sir, it will be still expensed to profit and loss account.
It will
So
be still
there
charged
is
to
no
P&L.
control. There is
Okay,
no control over the advertisement, whether it will be converted to sales or not.
Yes, so there is no control, there is no commitment. When you are spending this money while you are expecting future economic benefit, but nobody has committed you, right? It means there is no contractual right to receive. There is no control. This asset means this item is not separable. It is not identifiable, right?
Yes, sir.
Right? We discussed this.
Right. Yes.
Yes. So it is not separable, not identifiable, and hence it has to be charged to P&L. It has to be charged to P&L. Yes, very good. So
Sir,
this question has, have all the weapons to confuse you in exam, right? So it has also given you the life of 3 years. Okay. Yes, Saminathan, you were saying something.
Yes, sir. Actually, this question is giving us a subsequent sale has shown a significant improvement. By of giving that and also giving the continue for 3 years, they are actually really trapping us.
Yes.
So, okay, they will invest like that. So, the real case we discussed in a lot of the advertisement campaign exercise, there is no separability concept and there is no contractual right as well.
Yes. Exactly. That's what I was telling you. Yes. Yeah. Fourth. What is the fourth one? Yes. It has commenced developing a new drug. A. Drug means medicine. The project cost would be rupees 10 crore. Okay. Clinical trial proved successful. When they have done research, then when they have done clinical trial, so it has proved successful. And such drug is expected to generate revenue over the next 5 years. Okay. Over the next 5 years. Cost incurred till 31st March 20X1 is 5 crore. And balance cost incurred during the financial year 1-2 is 5 crore. So what is the treatment of this 10 crore? Tell me. What is the treatment of this 10 crore? I am giving you 30 seconds.
Sir, up to 31st March is the research phase, and after that it is a development phase. The 5 crore is one is that P&L and one is that capitalized.
Okay. Anyone else?
Since this drug is expected to generate revenue over the next 5 years, then the balance cost would be capitalized 5 crores, and the initial cost 5 crores will be expensed to profit loss account.
Or maybe since we are not able to identify, it has to be charged to P&L.
So in this question, tell me one thing. It has commenced developing a new drug. So please read this point number 4 with me. What it is saying that it has commenced developing a new drug A. The project cost would be rupees 10 crore. Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. Cost incurred till 31st March is 5 crore. Means when this company is telling you that my clinical trials are successful and it is generating a revenue over the 5-year, technical feasibility is there, right? Future economic benefit is probable and everything is successful, development criteria has already been met, and then it is telling you that I have spent already 5 crore rupees and in the next year I'll spend 5 crore rupees more. So where it is talking about that this 5 crore pertains to research phase? The question is given you.
Development phase.
Yeah. See, here the cost incurred accumulated till 31st March 2021 is 5 crore. See,
Yes.
it has commenced development a new project. Comparing these two lines, which means the cost incurred prior to commencement is 5 crore. That is what my assumption is.
No, so
Sir, it
that
was
is your assumption, but
fixed cost, sir.
it is saying that it is started developing a new drug and project cost would be this much. Clinical trial proved successful at the first sort, and it says that cost incurred accumulated till date. Accumulated. If the cost would have been expensed to P&L, it has not been accumulated, right?
Yes, sir.
So it
And this,
means the opening cost is 5 crore till 31st March 20x1, and in 1 to it is 5 crore. So total 10 crore has to be capitalized and depreciated, amortized over a period of 5 years. The total has to be amortized. So let's see what ICAI answer is saying. Let's see that also. It says that the development cost incurred during the financial year 1-2 should be capitalized. Cost of intangible asset as on 31st March 2022. Opening cost is 5 crore and development cost is 5 crore. So total cost is 10 crore. Okay. So what it is saying? It is saying the same thing. Cost of intangible asset as on 31st March 2002. 5 crore is the opening cost, development cost 5 crore, 10 crore is the total cost. Right. So while the answer is also confusing you, so you should take a assumption. So how you write this question in the exam, let me tell you. So when this kind of question will come into the exam, you will take a assumption. Okay. So if it is not clear, let's say if you are thinking that 5 crore should be charged to P&L, then you should write. In the question, the time frame of research phase is not given. Okay. And hence, we are not sure that the amount expensed till 31st March 2001 is on account of research phase or development phase, right? Because the time period of research and development is not given. Okay. And hence, if it is not clear that if it is a research phase expense or development phase expense, so standard is saying that it can be taken to research phase and hence we can charge 5 crore rupees to P&L, right? And the future cost of 5 crore should be capitalized as a intangible asset because it is clear cut pertaining to development cost. That is one way of answering this thing. Second way, since the question is not clear on the research and development phase, and the question says that the clinical trial has already proved and there is an accumulated cost incurred till 31st March 2001 is this much, it means that is the cost is getting accumulated. It means it is getting
Not accounted.
debited. It is not accounted. It is not charged to P&L. It is getting stored in a pool account. Pool account like CWIP account, IUD account, intangible asset under development account. Okay. So in this case,
should it not be expensed to profit and loss? This amount 5 crores.
So
Why
that's
was
what
this account accumulated?
Sorry, I didn't quote you.
Why was this amount accumulated of 5 crore rupees in the first place? Shouldn't it be expensed to profit and loss?
No,
Because
that's what I'm telling you, na. Ki if this kind of a question came in exam, you can answer in both the way. You can charge your 5 crore rupees to P&L as well as you can capitalize this 5 crore also. And that is why I'm telling you how to answer that. Okay. So the first answer I have given you that how to answer if you are saying that this 5 crore has to be treated to P&L. If I would be the examiner and if you will write the answer in such manner, I will give you full marks. Right. And if you want to capitalize this entire 10 crore rupees, then you should write in this manner. Then since the cost accumulated up to 31st March 1 is 5 crore rupees and the research and development phase is not very much clear. So we are assuming that this cost has been accumulated after development phase only. And hence we are capitalizing this as a cost of intangible asset and hence the cost is 10 crore rupees. Right. So both the answer would be right provided how you are writing the answer. Okay. Clear?
Yeah.
Point number 5. It has also commenced developing another drug B. it has incurred 50 lakh towards research expenses till 31st March 2022. The technical feasibility has not yet been established.
Yeah, it's a very clear case, sir. It's a research space, so we will expense it.
It's a very clear case. It's a research phase expense. It's a research phase expense. Okay. So this was the question on intangible asset from the ICAI study material. Friends, now we reach to the second part. Subsequent measurement. Subsequent measurement means
At the reporting date.
The capitalizing.
at the reporting date. At the reporting date. Yes. Anyone who can tell me the subsequent measurement in case of PP&E? You know, I told you that in intangible asset, you will revise 50% of the PP&E standard also.
Yes, sir.
Yeah. Can anyone tell me, and I want Neha or Mamta to answer, that what was the subsequent measurement in PP&E? Anything which you are able to remember.
Distribute in the remaining useful life.
No, so in PP&E, so have we covered cost model, revaluation model?
Every year we have to be reevaluate and depreciate upon useful life.
Okay. Neha, would you like to answer?
Yes, sir. Subsequent cost can be measured at the cost model or revaluation model.
Not the subsequent cost, right? So
Subsequent measurement.
in PP&E, we talked about initial cost and subsequent cost. Subsequent cost was the major replacement,
Sir, yeah.
inspection,
Yes,
overhaul.
yes. Sir,
Subsequent
recognition
measurement.
after transaction date.
Yes, after transaction date means on the reporting date, you can measure your PP&E at cost model or revaluation model, right? Same way, you can measure your intangible asset at cost model or revaluation model. These are the two options, two choices. Cost model means carrying your PP&E or intangible asset at cost minus accumulated depreciation minus accumulated impairment losses. You remember that?
Yes, sir.
If you are following a cost model, what you will do, you have already recorded at original cost. Every year you will start depreciating or amortizing. Correct? And if there is a sharp decline in the value of the asset, in the market value of the asset, then you will also record impairment loss. Right? So cost model means carrying the asset at cost, original cost, means you will not revalue, you will not record it at fair value. But what is meant by revaluation model?
Sir, PP is carried at fair value.
Yes.
So carrying
revaluation
value.
model means you are recording the asset at fair value. Okay. Yes. This is what we discussed in PP&E. Yes or no?
Yes, sir.
Yeah. So if you have opted for revaluation model, you have to revalue the asset every year if there is a major movement in the fair values. And if there is no major movement in the fair value, then do you require to revalue the asset every year?
Sir, 3 to 5 years.
3 to 5 years. Very good. Very good. Absolutely great. Very good. Yes. And this cost model or revaluation model, have we discussed any class of asset concept?
Yes, sir.
What is that concept?
Sir,
So class of
grouping
asset
of
concept
assets.
means?
Yeah, group of assets of a similar nature and use in an entity's operation.
Very good. Class of asset means group of asset having a similar nature and use in an entity's operations. So whenever we are applying cost model or revaluation model, this has to be applied consistently for a class of asset, right? You remember we discussed that there were 5 building. On the 2 building, the company has opted cost model. On the 3 building, the company has opted revaluation model. Was that right? Answer is no. Because all were office building, and if you are whatever model you are applying, you have to apply that model consistently to all the asset within a class. If you are applying a cost model to one building, you have to apply the cost model to all remaining 4 buildings also, right? But if there is a office building, there are 2 office building and there are 3 factory building. The company is applying cost model to office building and revaluation model to factory building. Is that right?
Yes, sir.
Why?
Sir, because nature or group of the assets is different.
Because class of asset is
Class of
different.
assets. Yes,
Because
sir.
the office building has a different nature and use, and factory building has a different nature and use in the entity's operation. Factory building is used for production, office building is used for administrative purposes, correct? So this is what we have discussed. And in case of revaluation model, how you will arrive at a carrying value of the asset? How you will compute carrying amount?
Sir, carrying value, revalued amount minus subsequent accumulated depreciation minus subsequent impairment losses.
Very good. Very good. Great. So revalued amount minus subsequent accumulated depreciation minus subsequent amortization. Why it is subsequent depreciation? Why it is subsequent impairment losses? Why?
Because we have taken fair value of the date of revaluation.
Yes, because we have taken a fair value on the date of revaluation. So that become my current value after everything, right? Now, if in the next year, because if there is no major volatility, you can do the revaluation in a period of 3 to 5 years, because revaluation is not a self exercise. For doing the revaluation, fair valuation, you have to engage a valuer and there is a cost to it. Okay. So what you will do in the next year? In the next year, if you have not done the revaluation, then whatever was the revalued amount minus amortization or depreciation for the year, or if there is an impairment loss of the year, then it will give you the carrying amount, right? And how you will compute the depreciation or amortization? Revalued amount or carrying amount, the opening balance divided by the remaining useful life. You remember I have told you that whatever depreciation amortization you have calculated on the day 1, on the year 1, that will not be same in the future years.
Yes, sir.
Why? Because if there is a change in useful life, then depreciation
will be
amortization will change. If there is an impairment loss, then depreciation amortization will change for future year. If there is a revaluation, then depreciation amortization will change. Okay. ये सब सुना सुना लग रहा है या सुना सुना लग रहा है?
सर सुना सुना लग रहा है सर.
सुना सुना लग रहा है ना? Is it something which is heard or is it something which is blank?
It's something that we have done,
Heard?
sir.
Heard? Okay. Very good. Clear in mind or clear from mind?
Clear in mind, sir.
Clear in mind. Thank you, Neha. Thank you so much. And you have explained it in a great manner. Thank you so much.
Thank you, sir.
Yeah. So subsequent measurement. And what we have done in intangible asset standard, we have done the revision of PP&E. बताओ आज आपने revision कर लिया सुबह सुबह. You have done the revision. Now, can we discuss subsequent measurement for intangible asset?
Yes, sir. Sir, I need one clarity. Sir?
Yes, please.
Sir, the thing is very clear. On the initial cost, we will book at the cost only, the PPE or the intangible asset as the case may be. Whether it is the revaluation model or the cost model, the initial cost will be measured at the cost only.
Yes.
On the subsequent measurement, say example, based on whether we choose the cost model or revaluation model, accordingly we will do it.
Yes.
Sir, in the choosing the model of the valuation, whether it will be done on that initial stage itself, that is my question number 1. Question number 2 is, when there is a work in progress is there, that is that we will suppose if it is chosen for the revaluation model, whether every year we will do the revaluation until the work in progress completed also. On that case, it is very sure that we discussed when there is a realizable value is higher than that carrying value of the work in progress, we will not recognize that. If it is that less than the carrying value, we will do the impairment of that. See, my question is that revaluation model or cost model, whether we will be choosing in the year first itself for work in progress as well or not. That is what my question is that.
So let me, answer your question in a conceptual manner, right? So that everybody will get benefited. Question number one, and probably I will add more question to give you the answer. Okay. Doesn't matter whether it was your question or not, but I will add more question and I'll answer that. Question number one, at the time of initial recognition and measurement, means at the transaction date. So why standard talks about for measuring at the time of initial measurement, why standard is talking about the cost model? Cost model means at cost, not the cost model. Be it a PP standard, be it a intangible asset standard, be it a investment property standard. All three standards says that the PP, intangible asset, investment property has to be initially measured at cost. And what is meaning of cost? What is the meaning of cost? Cost means what you are paying. Cost means what you are paying. Okay. So whatever you are paying, what is that? That is the market value. Right? You are paying in a market now. Yes or no?
Yes, sir.
So you are paying in a market. You are paying in a market. That is the market value. So initial measurement will always be at a cost, not at a cost model, at a cost. Right? Always at a cost. It is given in the standard. Now coming to the subsequent measurement, means reporting date. So now we have shifted from transaction date to reporting date. Okay. Again, I'm talking about PP or intangible asset, right? I can use interchangeably because the concept is same. So when I reach to the reporting date, now standard has given me two choices. Standard has told me, if you want to continue with the cost model, you are not required to do anything. Whatever original cost you have capitalized, you just need to charge depreciation. And there is a law of conservatism according to which impairment or asset standard has been built. The objective of the impairment of asset standard is no asset in the balance sheet. I am using the word no asset. No asset in the balance sheet has to be carried beyond their recoverable value. Means if there is a carrying value which is more than the recoverable value, carrying value has to be reduced to the recoverable value. This is the concept of impairment of asset, right? This is not the concept of revaluation. This is the concept of impairment of asset. Okay. So prior to opting for cost model or revaluation model, prior to opting, whether you are opting cost model or revaluation model, this impairment of asset concept is applicable on every asset. Means forget about revaluation model. If the company continue with the same cost, original cost, the company depreciate, and the company should also identify whether my market value, recoverable value is similar to my carrying value, which is original cost minus depreciation, minus accumulated depreciation. If answer is yes, then you are not required to do anything. But if answer is no, your recoverable value is lower than the original cost minus depreciation, then you need to also charge impairment loss. So impairment loss has to be charged even in the cost model also because of the impairment of asset concept, right? But if you want to increase, if you want to recognize the upside, if your asset like land and building typically, if your land and building has an upside and you know that the value has increased and you want to record that also, then the standard told you, okay, you can record that, but for that you have to opt for revaluation model and not only on one asset, all the asset within that class. Okay. So if you want to revalue one patent, then you have to revalue all the patent which you have taken. Okay. If you want to revalue one software, you have to revalue all the software. Okay. Software is a class, patent is a class, goodwill is a class. Okay. So friends, and standard also told you when you are recording an upside, you can't take it to P&L. Where you should take it?
Utilize it.
Revaluation surplus. other comprehensive income, revaluation surplus. Okay, you can't take it to the P&L. You cannot distribute the dividend. You have to take it other comprehensive income. This is on PP and intangible asset. Now talking about capital work in progress. So capital, you start constructing something. You are purchasing material. You are paying to laborers. You are constructing a building for the purpose of office use. So when you are constructing these things, when you are constructing a building, so what you are doing, whatever expense you are incurring, whatever item, whatever money you are incurring, you are taking that to a CWIP pool. You are taking that all the expenditure to the pool account, which is capital work in progress. You just keep on loading funds. You keep on loading the items, and your CWIP start building, right? And when the asset will become available for use, then it will become a PP, right? Then only you will, when it is become available for use, then you will transfer your CWIP to PP&E or intangible asset, right? So when it become a PP&E, then only this cost model, revaluation model, depreciation concept will start, right? In the cost model or revaluation model, the carrying value, how to determine the carrying value is given. Cost minus accumulated depreciation minus accumulated impairment losses. Tell me, do you depreciate CWIP or intangible asset under development?
No, sir.
No, why? It is not available for use. It is under construction, it is under development, under construction, right? So that is why this cost model, revaluation model, that is not applicable for CWIP or intangible asset under development. Whatever you are incurring as an expense, you have to capitalize that as a CWIP. Okay. And why impairment is applicable? Because impairment is applicable on all the standard. CWIP is on all the asset. CWIP is also an asset. CWIP भी आपका एक asset है. Okay. Is that clear, Saminathan?
Yes, sir. Why I was asked this question? We have impaired, no, that one question we asked. The 24 lakhs is that
Yes.
asset and 22 lakhs is the recoverable amount. We charged to impairment loss. That is what's my triggering point of this question actually.
Yeah. Sure.
Thank you so much, sir.
Okay. Right.
Sir, also one question in terms of cost model. We have the impairment concept. So it's like in the revaluation model, we have that requirement by the standard, which says it's like we have to do the revaluation. It's like if it's a higher one, then for 1 year, if not, then 3 to 5 years. So in the cost model, it's like since the standard doesn't say any requirement of estimating the market value or realizable value, it's like how do we even identify that this is our impairment loss?
See, that's what I told you, that even before opting for cost model or revaluation model, this impairment of asset standard is a different standard, right? And what is the basic concept of that standard? It says that in your balance sheet, whatever assets are there are two kind of asset: financial asset, non-financial asset. Okay. So financial asset means like financial instrument, investments, cash, bank, debtors. Okay. These are the financial asset. For impairment of financial asset, Ind AS 109 has given you a concept. For impairment of non-financial asset, either a specific standard talks about like inventory. In the inventory, there is a concept of inventory has to be measured at cost or NRV, whichever is
lower.
Whichever is lower, right? It means if your cost of inventory is 100, NRV is 80, so you have to recognize an impairment loss of 20. So it is given in Ind AS 2. For all other standard where the specific standard does not cover that portion of impairment, Ind AS 36 covers that. Ind AS 36 says that no any asset in the balance sheet should be stated at more than their recoverable amount. Means, and it says that if carrying amount is more than the recoverable amount, then you have to reduce the carrying value to the recoverable value, carrying amount to the recoverable amount, right? And you have to recognize an impairment loss. So the point is, the requirement of impairment is not by cost or revaluation. The requirement of impairment loss is an independent requirement, right? Means, and I know from where your question is coming. Your question is coming, sir, if we have opted for revaluation model, we went to the market to check the valuation of the asset. or we engage the valuer to value the asset, right? And that's how we will be able to know whether the value is high or value is low, right? तभी तो पता लगेगा
Yes,
कि
sir.
वैल्यू बढ़ी हुई है गिरी हुई है, करेक्ट?
Yes, sir.
But if you have opted for a cost model and you are continuing with the cost, then why it is required? Correct? That's what your question is. कि सर फिर तो कोई फर्क नहीं बचा ना, अगर आपको इम्पेयरमेंट भी चेक करना है तो आपको फेयर वैल्यू तो निकालनी पड़ेगी, मार्केट वैल्यू तो निकालनी पड़ेगी, करेक्ट?
Yes.
Yeah. So friends, when you read Ind AS 36 and after this, in the next week, I will take Ind AS 36. You know what that standard says that? That standard says that you need to compute the recoverable value. You need to check the market value only when the impairment indicator exists. Means if your business is growing good, if your asset is giving you good performance, right? And you have opted for a cost model, in that case, you are not required to check the market value, right? So you are required to check the market value only when the impairment indicator exists. So when I will cover Ind AS 36, you will be able to know the circumstances in which you have to check the market value for checking the impairment loss. Okay. So in every case, when you have opted for a cost model, you are not required to check the market value. Okay.
Yes, sir. Now it is clear.
Is that clear?
Yes.
But if you have opted for revaluation model, then of course, revaluation model का तो नाम ही fair value है. In that case, you have to check the market value. Okay.
Yes.
And you know, so these standards are equally applicable to chartered accountant and chartered accountant in progress. मतलब it is applicable to CWIP chartered accountant and the complete chartered accountant. Standard is same for both of them. Means standard is for students as well as professionals and industry, right? So you are learning real time industry experience. So in industry, when you are doing a business, when you are doing an accounting, so you will be able to know whether my asset value is getting declined or it is getting high. What is the value, right? So exact value you will not be able to know, but directionally you will be able to know whether it is declining or it is growing higher, right? So वो सब sense आपको आ जाता है practical life. Okay. Yes. So friends, this cost model, subsequent measurement, cost model, revaluation model. So it says that intangible asset can be measured using cost model or revaluation model. Whatever model the company will apply, it should apply consistently to that class of asset. Class of asset means grouping of similar asset having same nature and use in entity operations. Right? Example of class of asset: software, patent, copyright, trademark, formula, goodwill, IPR, technical know-how, licenses, mining rights. These are the class of asset. Okay, these are the class of asset. Now let's say the company has three software A, B, and C. The company has opted a revaluation model for software A, but for B and C, the company has opted for a cost model. Tell me whether this treatment is correct or not.
No, sir, it's not correct, sir. Because
Why?
the software is the nature is same, and it should be either you do it as a cost model or the revaluation model.
This is not correct. It need to apply the same model for all three class of assets, right? Now there is a tweak. There's a tweak. The company has three software A, B, and C. The company has opted revaluation model for software A and B, and the company has opted for a cost model for software C. The active market is not there, and the company is not able to determine the fair value of the software C. Tell me whether it is right or wrong.
Right, sir. Right, sir. Because the software C, there is a separate thing, market.
Standard says that you have to apply same model to all the asset of a class. But you know, this intangible asset does not have a physical substance, right? Like tangible asset has a physical substance, so it is very easy to compute the fair value or get the fair value of something which you can see, touch, and hold. But the point is, for intangible asset, it is not as easy in comparison to tangible asset. So standard says that there is one exception which is given. While it says that you have to apply the same model consistently cost or revaluation to all the asset within the same class. But if for a particular asset, if the company has opted for a revaluation model for the assets of a single class, but for a particular asset, if the active market does not exist, in that case, the company can continue or the company can live with the cost model. So in this case, answer is yes, correct. The company has to apply the same model for all the assets in a single class. However, if any asset fair value cannot be determined, in that case, the asset can be carried at cost model with a suitable disclosure in the notes to accounts. Okay. Right? Will you be able to remember this exception? Yeah.
Yes, sir.
Yes. So this is the exception. This is the exception. Okay. This is the exception. So cost model, revaluation model, have you become a champion or not? This is a revision which is going on. Cost
Yes,
model,
sir.
same I have copied from my PP Excel file. I have copied from my PP Excel file. Cost model is on the basis of cost at the time of transaction. Carrying amount is computed cost minus accumulated amortization minus accumulated impairment loss. Revaluation model based on fair value. Carrying amount is revalued amount minus subsequent amortization minus subsequent impairment losses. For example, A Limited has purchased a software for rupees 1 lakh and the life of the software is 4 years. Calculate the carrying value. So how I have calculated the carrying value? Cost, depreciation. So I am using the opening balance divided by the remaining useful life. Can you see my calculation?
No, sir. Your screen
No.
hasn't.
No. Okay. Sorry. Yes. Okay, sorry. So basically my PPT was there. So this is what I've discussed so far, right? This is what I've discussed so far. Okay. Yes. A Limited has purchased a software for rupees 1 lakh. Okay. The life of the software is 4 years. Calculate the carrying value. So cost is 1 lakh. Divide by 4, 25,000. Then balance is 75,000. Again, whether I have divided 1 lakh by 20, 1 lakh by 4 or 75 by 3.
75 by 3.
While the answer is same, but the method of calculation, the way of calculation is not 1 lakh by 4, it is 75 by 3. Means every year what I am doing, I am dividing my opening balance divided by remaining useful life, right? Yes, this is how it is there. Now, second example. A Limited has purchased a software for rupees 1 lakh, life of software 4 years. Compute the carrying value at the end of every year. Assuming the recoverable value at the end of year is 40,000. It is a cost model. First year amortization 25,000. Second year amortization 25,000. So my cost minus accumulated amortization is 50,000. But the market value is 40,000. क्या करूं 10,000 का? Impairment loss. Yes?
Yes, sir.
So now my closing balance at the end of the second year is 40,000. And what is the remaining life?
2 years.
2 years. So this 40,000 has to be depreciated over the remaining life. What is the amortization every year? 20,000, right? 20,000 is the amortization. Any challenge? Any doubt? Revaluation model. So you have to opt for revaluation. You have to do the revaluation, provided if there is no major movement, you can do the revaluation 3 to 5 years. So cost minus amortization, 4 years, same life, 75,000, right? 50,000. Now let's say at the end of the second year, the fair value comes out to 1.1 lakh. What is the carrying value at the end of the second year after amortization? Cost minus amortization, what is the carrying value? Sanjay, what is the carrying value? Sanjay, cost is 1 lakh. Life is 4 years. What is the carrying value at the end of the second year? Or Akshay, what is the carrying value?
So 50,000.
50,000
Sorry,
is
sir.
the 50.
I wasn't able to
Okay.
connect. Okay.
50,000 is the carrying value. Cost minus accumulated amortization. But what is the fair value which is given in the question?
1,10,000.
1,10,000. So what to do with this 110 and 50? So the 60,000. So I have to add 60,000 because I have opted for revaluation model. What is my accounting entry? Software account debit to revaluation surplus.
Revaluation surplus,
right? OCI. So my fair value or revalued amount is 1,10,000. So this will become my carrying value. 1,10,000 will become my carrying value. And this 1,10,000 will be amortized over how many years? Over the remaining
2 years.
2 years. So what is my depreciation in the third year?
55,000.
55,000. 110 divided by 2. What is the depreciation in the fourth year?
Again 50,000.
Again
55,000.
55,000. Yes. 55,000 divided by 1. This is my cost model and revaluation model. Cut copy paste of PPNE. Cut copy paste of PPNE. Right. So friends, it's 8:36 now. Let's have a break and we will start at 8:50. Okay. Yes. So friends, we spoke about this revaluation, cost model, revaluation model, right? This is the same slide which I have copied from PPNE standard. The only thing is, the only change, you know, what I have done. Tell me what is the change in this slide?
There is amortization instead of depreciation.
Yes, yes. So I have copied this slide from PP standard, from PP slide, and instead of depreciation, I have changed the word amortization. Okay. Same slide I have copied from PPE. What change I have done? Instead of depreciation, I replaced this with amortization.
Accumulated amortization.
Accumulated amortization, right? And one more change. This line was not there in PPE. Sorry, not this line, the second line. If a single item of intangible asset is revalued, then the entire class of intangible asset to which that item belongs should be revalued unless this particular line. This unless was not there in PP. I have added this line in Ind AS 38. Unless there is no active market for those assets. Have we taken an example on this?
Yes.
Yeah. So the company has patent, 3 patent the company has. The company opted for revaluation model for patent. 2 patent are approved by the US drug authorities and 1 patent is from Indian authority. For Indian patent, there is no market value, but for US patent, there is a market value. There is a fair value. So can I do the can I apply revaluation model for the patent which are approved by US authorities? There are 2 patent and 1 patent which is approved by Indian authority. So can I opt for those 2 patent revaluation model and for Indian patent cost model?
Yes, sir.
Yes, because the active market does not exist, right? So this line I have added, the depreciation I have replaced with what? Amortization. The rest is same. Rest is same. This again, this slide I have copied from where? From my Ind AS 16 slide. Valuation in case of revaluation model need not to be performed every year or every reporting period. It has to be at sufficient regularity. Where movement in fair values are highly volatile, then do every year. But if it is not highly volatile, then 3 to 5 years. Okay. Why I am reiterating that, you know, I have covered this in PPE, what change I have done from that slide to this slide, so that you guys will be able to understand it more, so that you guys will be able to revise the PP also, right? Because our intent is to, in a single time, we will do multitasking, right? We will do multitasking. So when you are learning PP, when you are revising your PP, your intangible asset was automatically getting revised. Okay. Then your revaluation gains and losses. Have we covered revaluation gains and losses in PP? Same slide. I have copied from Ind AS 16. Okay. So whenever you have opted for a revaluation model and there is an increase, what is the impact of that increase? So first time there is an increase. What is the impact of the increase?
It will be taken to revaluation surplus.
What is the accounting entry?
Intangible asset to revaluation surplus.
Where the revaluation surplus will go?
Other comprehensive income.
Other comprehensive income. It is like a reserve, other comprehensive income. What happens? In the second year, again you have done the revaluation, again there is an increase. Then?
Again will go to revaluation surplus.
Revaluation surplus account debit to?
Intangible assets to
intangible asset account debit to revaluation surplus OCI. Okay. Initially there was an increase, but subsequently there is a decrease. Then subsequently there is a decrease. Then
revaluation surplus will be first adjusted with the increase we had done earlier. Then if there is any amount remaining, it will go to P&L.
Okay. So if subsequently there is a decrease, then to the extent, for example, you have already recorded a revaluation surplus of 100 rupees. and the decrease in 90 rupees. So to the extent revaluation surplus is available, you have to debit the revaluation surplus. Revaluation surplus OCI account debit to intangible asset account.
Intangible assets.
To intangible asset account, okay? And if the revaluation surplus is 100 rupees, but the decrease is 120 rupees, then
it will go to profit and loss account.
Then to the extent revaluation surplus is available, you have to debit revaluation surplus. So revaluation surplus account debit 100 rupees. Then impairment loss in P&L 20 rupees to intangible asset 120 rupees, right?
Right.
If first time you have done the revaluation and first time there is a decrease, then
First time it will go to the profit and loss account.
impairment loss. What is the accounting
Impairment loss.
entry?
Impairment loss. Yes.
What is the accounting entry?
The profit and loss account debit intangible assets.
So impairment loss in P&L debit to intangible asset. Okay. So first time there is a decrease and again there is a decrease. Next time also there is more decrease. Then
again profit and loss account debited and the intangible assets credited.
Yes.
By that amount.
Yes. If first time there was a decrease but now there is an increase, then
so we will debit profit and loss account to the extent we had debited and the remaining to P&L.
So basically, if initially there was a decrease, you have taken the hit to the P&L, right? So, and subsequently there is an increase. So to the extent you have already taken a hit, you need to reverse your P&L, okay? Means, for example, you have already taken a hit of 100 rupees in the P&L, 100 rupees impairment loss. Now, there is an increase of 90 rupees. So what you will do? You will do intangible asset debit to P&L, to reversal of impairment loss P&L, right? 90 rupees. For example, initially you have debited your P&L by impairment loss of 100 rupees. But now there is an increase of 120 rupees. So what you will do? To the extent of earlier debit, to P&L, now you will credit to P&L. So the debit to P&L was 100 only. So what your accounting entry will pass? Intangible asset 120, intangible asset debit 120 to P&L 100 to revaluation surplus OCI 20. This is the accounting entry you need to pass. Is that clear? Is that clear or clear?
Yes.
Same cut, copy, paste of Ind AS 16. Now, again, quickly, I'll discuss this one more example to make it robust, not in your mind, but in your heart also. I want it to be printed in your heart. Following details are given for a mining right license. Acquisition date, 1st April 18. Fair value has been given for 31st March 19, 20, 21. 10,000 was, so it was acquired on 10,000 rupees. Fair value in the first year, at the end of the first year, fair value become 12,000. At the end of the second year, fair value become 15,000. At the end of the third year, fair value has gone down to 9,000. After advise the treatment of the given information, the company has opted for revaluation model, right? And you need to show the balance in revaluation surplus account. What is the accounting entry on 1st April 18?
Intangible asset account debit to bank.
To bank 10,000. Okay. What is the accounting entry on 31st March 19? If the company has opted for revaluation model and the value become 12,000.
Intangible asset account debit 2,000 to revaluation surplus 2,000.
To revaluation surplus 2,000. Okay. And what is the balance in revaluation surplus? 2,000.
2,000.
What is the accounting entry at the end of the second year, 31st March 20? What is the accounting entry?
Intangible asset account debit 3,000 more and
Yes.
to revaluation surplus 3,000.
What is the balance in revaluation surplus account?
5. 3 plus 2, 5.
5,000. 2 plus 3, 5. 5,000. Okay. So now in the third year, from 15,000 of carrying value, it has gone down to 9,000. So what is the decrease?
Decrease
6,000.
is 6,000. Yes.
6,000. But how much revaluation surplus we are having?
5,000.
5,000. So where the 1,000 decrease will go?
P&L.
P&L. Impairment loss. What is the accounting entry?
Revaluation reserve
Revaluation
debit
surplus
Your account debit intangible.
First of
impairment
all,
on
just
1,000.
allow me to speak. First of all, your asset value has gone down. You need to credit your asset. Yes.
Yes.
How? So what is the value of the credit? To intangible asset. How much? 6,000.
6,000.
6,000. So you have the revaluation surplus of 5,000. What you will do now? You have to debit revaluation surplus. So
Debit.
revaluation surplus account debit by what amount?
5,000.
5,000. To intangible asset 6,000. So
6,000.
where the debit of 1,000 will go?
Profit and loss account.
Profit and loss account, impairment loss.
Impairment loss.
Revaluation surplus account debit, loss on revaluation debit to P&L, to intangible asset 6,000, right? And your revaluation surplus has also become 0. Your revaluation surplus has also become 0. Yes. Case 2. Acquisition date 1st April 18, purchased on 10,000, it become 9,000, it become 8,000. Now in the third year, it become 12,000. Again, what is the accounting entry for purchase? Asset to bank.
Asset to bank.
When first time there's a decrease, what is the accounting entry? Impairment loss charged to P&L.
Yes.
Profit loss to intangible
asset 1,000.
So your P&L negative balance means impairment loss balance is 1,000. In the second year, again 1,000 decrease. Impairment loss debit to
intangible asset.
Now your intangible asset has 2,000 rupees of balance. Impairment loss has 2,000 rupees of balance. So from 8,000 in the second year, it has gone up to 12,000. It has gone up by 4,000. What is the accounting entry?
The intangible asset will be debited by 4,000 rupees.
Yes.
And impairment loss will be reversed.
Yes.
And revaluation surplus will be credited by 2,000 rupees.
So this is how you need to apply your accounting treatment. Okay. I hope it is crystal clear.
Yes, sir. Very much clear, sir.
Yes.
Thank you.
If I have to dub this English movie into Hindi movie, what I need to do? If I have to dub this intangible asset into a PPE, what I need to do? Instead of mining right license, I will use the word car or building. And instead of intangible asset, I'll use the word PPE. So this illustration is ready for PPE without changing any number, without changing any other thing. Means the treatment is cut, copy, paste in PPE and in intangible asset. Right? Is that clear? Is that clear?
Clear. Yes.
If it is a useful life is given in this question, it will be very interesting. It would have been.
Yeah. So even though I have told you that how to arrive at, so first you need to amortize, then you need to compare, the value with the fair value, right? You need to compare that. And I've already shown you with the help of this example, when I have explained cost model, revaluation model, you can see how we have compared this thing. Okay. Right?
Right, sir. The concept is clear, sir. Okay, thank you.
So friends, let me tell you, if you will, so PP, intangible asset and investment property, 3 standard. And these 3 standards can be completed in 4 hours. I'm talking about revision in 3 to 4 hours. And these 3 standard will give you a minimum 10 marks. Minimum 10 marks. I must. 9 to 10 marks. So see, 4-hour effort will give you around 9 to 10 marks in FR, right? And these 3 standards are very, very, very important from the real life perspective also, right? Yeah. So now utilization of revaluation surplus. So when there is a revaluation surplus, how this revaluation surplus will knocked off? Where the revaluation surplus will go?
General reserve.
To retained earnings.
Retained earnings.
Retained, not general reserve, retained earning. So this revaluation surplus will always go to retained earnings, right? So the balance of revaluation surplus will always transfer to retained earning. Now, there are 2 ways by which this revaluation surplus can be exhausted. Number 1, when the asset is derecognized, when the asset is disposed of, the company has booked the revaluation surplus on mining right on license. Now the company has disposed of the license. So in that case, the revaluation surplus is also required to be transferred. So transferred to where? It has to be transferred to retained earnings. The entire amount will be transferred to retained earning. The entire amount will be transferred to retained earning. Okay. What is the accounting entry? Revaluation surplus OCI account debit. Revaluation surplus account debit to retained earnings. Revaluation surplus account debit to retained earnings. Okay. Now, can the revaluation surplus transferred to retained earning during the life of the asset also? बताया था मैंने आपको ऐसा पीपीई में.
Yes, sir. It is required when there is a extra amortization is applicable.
Neha, do you remember the utilization or revaluation surplus concept in PP?
Yes, sir.
Mamta, do you remember the concept? Akshay, do you remember the concept? The utilization or revaluation surplus in PP. In PP also, the revaluation surplus will be utilized either at the time of disposal or during the life of the asset also, right? So the accounting entry is always revaluation surplus account debit to retained earnings. But the point is, if the revaluation surplus is transferred during the life of the asset, how much revaluation surplus will be transferred every year? We did one question from ICAI study material also, right? So during the life of the asset, you need to compute the extra depreciation, extra amortization. Means, for example, the original cost of the asset was 1 lakh, life was 5 years. So how much is the depreciation or amortization?
4,000.
1 lakh is the cost, 5 year is the life. What is the depreciation or amortization every year?
20,000.
20,000, yes.
So from 1 lakh, let's say it was revalued to 1.5 lakh. So how much is the extra depreciation? 1.5 divided by 5. How much is the extra depreciation? 30,000, right? So what is the extra depreciation?
10,000.
So earlier 20, now it is 30. What is the extra depreciation?
10,000.
10,000. So to the extent of 10,000, revaluation surplus can be debited and retained earning can be credited. Why? Because in the P&L, the depreciation or amortization needs to be charged on the revalued amount in the P&L. Okay. So standard says that during the life of the asset, the revaluation surplus can be utilized every year to the extent of extra amortization. And how this extra amortization will be computed? For example, life of the asset is 10 years. Cost is 1 lakh. Revalued amount is 1,40,000. So amortization on the basis of original cost, 10,000. On the basis of revalued amount, 14,000. So excess amortization, 4,000. So revaluation surplus can be debited by 4,000 and retained earning can be credited by 4,000 every year. Right? This is the concept. This is the concept. Same concept what we have covered in PPE.
Yes, sir. अभी याद आ गया.
याद आ गया?
Sir, I have one query, sir, actually.
Yeah, please.
So, sir, on the extra depreciation or extra amortization, we will move that extra portion to every year when there is extra depreciation is available to the from the retained earning to the revaluation reserve to retained earning. That is very much clear. Is there any option given in the standard at the end of the retirement years on the derecognition can be moved? See, instead of I mean to say that instead of charging to every year, the extra depreciation can be kept it as in the revaluation reserve alone, and can we move to that end of that life?
Yeah, so these are the two options. This is not mandatory. These are the option. So basically what you will do, so first life will come or first death will come?
Okay.
Tell me, life will come first or death will come first? Life. So death comes after life, na?
Yes,
So
sir.
during the life of the asset, when you are using the asset, if you want to utilize your revaluation surplus, how you can use during the life of the asset? So whatever is the extra depreciation or amortization, to that extent you can pass on to retained earning, correct? That is one. But what happens if you haven't transferred revaluation surplus to retained earning during the life of the asset? Then you will have a balance in the revaluation surplus account at the time of expiry of the life or at the time of derecognition.
Yes.
At the time of derecognition, you will have a revaluation surplus balance, right? So
Yes, sir.
at the time of derecognition, at the time of death, this is mandatory. You have to move your revaluation surplus to retained earnings. But during the life of asset, it is optional. If you want to do, please do. If you don't want to do, you can't. You cannot do. Right?
Okay.
In practical life, in real life, many companies do and many companies don't do. Right? But in your examination, be careful about the question. Right? Be careful about the question. For example, there is a 3 or 4 marks question. In a lengthy question, there is one aspect which the examiner wants to test. For example, he has given you the original cost, revalued amount, right? And he also wanted to understand the treatment of the revaluation surplus. Then you should not write the treatment that it is not mandatory and hence no entry is required. Right? So the idea is to check, do you know that concept? And if you know the concept, what is the accounting entry? What is the treatment? Okay. In examination, please do that. But in practical and real life, of course, it is an option. It is not a mandatory. It is option.
Okay. It is a company policy. They can do it either way. Thank you.
Yeah. Yeah.
It's an option. Thank you. Thank you, sir.
You can see the word. What is this word? When the asset is being used, revaluation reserve may transferred. When the asset is being used, revaluation reserve may transferred. May means
Yeah, it's not compulsory.
it's not compulsory. But when the asset is derecognized, then whole
Mandatory.
revaluation surplus is directly transferred to the retained earning. Have you found any word may or something? It is like an order. It is an order, right? But in the second case, it is just like a request. Yes or no? It is just like a
Yes.
request. Okay. Yes. Very good, friends.
सर
This is
वन क्वेश्चन
yes.
अगर हमने रिवॉल्यूशन रिजर्व को ट्रांसफर कर दिया है तो और नेक्स्ट ईयर में अगर अमोर्टाइजेशन लॉस होता है इम्पेयरमेंट लॉस तो उसे हम पीएल में चार्ज करेंगे ना फिर
अगर हमने
रिटेन अर्निंग में ट्रांसफर कर दिया है ऑप्शन चूज
yes,
कर
yes.
तो फिर नेक्स्ट ईयर जब इम्पेयरमेंट लॉस हुआ तो वो कंप्लीटली पीएल में चार्ज होगा
See what happened. So basically, let's say you have a revaluation surplus in the year 1. Okay.
राइट
And life of the asset is 10 years. So how many year has to go? 9.
9 ईयर
पहले साल में आपने फर्स्ट ईयर में. So first I will explain in Hindi and then I'll explain in English. Okay. So पहले साल में आपको revaluation surplus किया आपने. आपको revaluation surplus हुआ let's say 1000 rupees का. आपने क्या किया? एसेट को डेबिट किया, रिवैल्यूएशन सरप्लस को क्रेडिट किया. अब कितने साल बचे? 9 साल बचे. अब आपके पास 2 ऑप्शन है. पहला ऑप्शन क्या है? रिवैल्यूएशन सरप्लस को आप एज इट इज पड़े रहने दीजिए और आप जब डीरेकॉग्निशन का टाइम आएगा 10 साल के बाद या बीच में आप एसेट को सेल कर दोगे तो आप क्या करोगे? जो भी रिवैल्यूएशन सरप्लस बचा हुआ है उसको कहां लेके जाओगे? रिटेन अर्निंग में ट्रांसफर कर दोगे क्योंकि जिस एसेट पे बना है वो एसेट ही नहीं बचा. राइट. सेकेंड, अगर आपने ये ऑप्शन लिया है कि हर साल आप जो भी एक्स्ट्रा अमाउंट था, एक्स्ट्रा डिप्रिसिएशन था, उसको उतना अमाउंट आप क्या कर रहे थे? रिवैल्यूएशन सरप्लस को रिटेन अर्निंग में ट्रांसफर कर रहे थे. करेक्ट. सो इन द थर्ड ईयर, अभी तक आपने 2 साल क्या किया होगा? मैं तीसरे साल पे आ गया. अभी तक 2 साल आपने कुछ रिवैल्यूएशन सरप्लस को यूटिलाइज कर लिया, रिवैल्यूएशन सरप्लस को रिटेन अर्निंग में ट्रांसफर कर लिया. राइट. करेक्ट. तो अभी भी आपके पास रिवैल्यूएशन सरप्लस बचा होगा. यस और नो? बचा होगा ना थर्ड ईयर के एंड में?
हमने ट्रांसफर कर दिया तो फिर बचा कैसे होगा?
नहीं, आप क्योंकि जो आप ट्रांसफर कर रहे हो, आप क्या ट्रांसफर कर रहे हो? व्हाट इज योर रिवैल्यूएशन सरप्लस? टेल मी. योर रिवैल्यूएशन सरप्लस इज अ डिफरेंस बिटवीन द कैरिंग वैल्यू मींस ओरिजिनल कॉस्ट वर्सेस फेयर वैल्यू. फॉर एग्जांपल, योर कैरिंग वैल्यू इज 1 लाख रुपी and your fair value or revalued amount is 1,50,000 rupees. What is the revaluation surplus? 50,000 रुपीज 50,000 रुपीज ना। आपका जो एक्स्ट्रा डेप्रिसिएशन या अमोर्टाइजेशन आएगा किस वैल्यू पे आएगा? 50,000 पे ही तो आएगा। ये समझ नहीं आया आपको?
50,000 पे आएगा एक्स्ट्रा डेप्रिसिएशन
आपका। if I'll ask you that what has changed, I will tell you, Mamta, that Mamta, your asset was 1 lakh rupee. Now the fair value of the asset become 1.5 lakh. So what is the extra? So what is the gain? What is the surplus? 50,000 rupees.
50,000.
Yes. So
Yes.
I will tell you, Mamta, is it a good news or is it a bad news? You will say that, sir, it is a good news that my asset value is gone up by 50,000. But sir, every year in my P&L, I will have an extra depreciation also. Extra depreciation on what amount? On 1 lakh or on 50,000?
50,000.
50,000. So tell me, the depreciation has to be allocated over the useful life.
Right.
So revaluation surplus is one time. It's like a one-time activity. It's a one-off activity. So you got 50,000 of surplus as a one-time. But on 50,000, you will depreciate over the life. Let's say remaining life is 9 years. So 50,000 divided by 9, which is around how much? 50,000 divided by 9 is how much? Around 5,700. 5,555. So tell me, every year you will utilize, let's say you have opted that I will also transfer my revaluation surplus to retained earning every year. So how much you will transfer? To the extent of extra depreciation. Extra depreciation कितना है?
5,000.
5,555. And revaluation surplus कितना है?
50,000.
50,000. So in the second year means when first time you are transferring your revaluation surplus to retained earning, what is the balance revaluation surplus you will have? 50,000 minus 5,555.
44,000.
45,000. Around 45,000. Next year again 5,000 will be reduced, around 40,000. So every year you will left with a balance of revaluation surplus. For example, in between there is a impairment loss. तो क्या करेंगे? पहले impairment loss को adjust करेंगे revaluation surplus.
Okay, sir. Thank you, sir.
Clear?
Yes, sir.
Very much clear? Okay. Yes. Now let's discuss one question on revaluation model. Saturn Limited acquired an intangible asset on 31st March for rupees 1 lakh. The asset was revalued at 1,20,000 on 31st March 2 and 85,000 on 31st March 3. Tell me quickly, क्या treatment होगा?
In 2002, it will be intangible asset account debit to revaluation surplus by 20,000 rupees.
Yes. And 3?
Year 3 will be revaluation surplus will be reversed to the extent of 1,20,000.
For 20,000 and for balance.
35,000.
So first of all, tell me the carrying value on 31st March 2 was 120. On 31st March 3, it become 85,000. So how much is the reduction? How much is the decline?
35,000.
35,000. So you will credit your intangible asset by 35,000. Now, how much revaluation surplus is available?
20,000.
20,000. So revaluation surplus debit 20,000. Intangible asset credit 35,000. Where 15,000 will go?
Impairment loss.
Impairment loss in P.
Loss.
Very good. So this is how you should answer. This is how you should compare. Okay. Jupiter Limited acquired an intangible asset on 31st March 2001 for 1 lakh. What is the cost? 1 lakh. Asset was revalued at 85,000 on 31st March 2. How much is the decline?
15,000.
15,000. So intangible asset credit. How much? 15,000.
15,000.
Where the debit will go?
Impairment loss.
Impairment loss.
Impairment loss.
Debit. From 85,000 the next year it will become 1,05,000. How much is the increase?
20,000.
20,000.
Intangible asset debit 20,000. What will credit?
5,000 for P&L and
5,000 is?
10,000 for impairment.
5,000
For reverse 15,000 से 5,000.
15,000 for impairment.
It has increased.
15,000 for impairment loss.
So the value has
For
increased. Intangible asset account debit to P&L. To P&L means whatever impairment loss you have recorded. Earlier, how much you have recorded? 15,000. So
15,000.
intangible asset account debit 20,000. To impairment loss P&L credit 15,000. Where the additional credit will go? 5,000. Where?
Revaluation surplus.
Revaluation surplus. Revaluation surplus. Additional credit will go to revaluation surplus. Yes. Yes. This is the answer given in the Board of Studies material. Now coming to the useful life of the intangible asset. Important. Useful life. So the telecom company Bharti Airtel has acquired a telecom license, 5G license from Government of India. The cost of the license is 10,000 crore. And license has been given for a period of 20 years. What is the useful life of this intangible asset?
20 years, sir.
20 years.
20 years. So useful life of the intangible asset arises from contractual or other legal right? It shall not exceed the period of contractual or legal right. Now, Bharti Airtel has got a license for 20 years, but Bharti Airtel only foresee the future economic benefit for 15 years, right? Even they need the license only for 15 years, but the government said, we are not giving you, we are not giving license for a period less than 20 years. So we are giving a license for a minimum period of 20 years, okay? We are giving a license for a minimum period of 20 years, right? So my question to all of you, what is the useful life of this license? Government has given for 20 years, Bharti Airtel only foresee the future economic benefit for 15 years.
So in this case, 15 years, sir.
Sorry? 15 years.
Useful life will be 15 years in this case.
Okay. Yes. Useful life is 15 years. Standard says that useful life shall not exceed the period of contractual or legal right, but it can be shorter than the contractual or legal right, depending on the period over which the entity is expecting the future economic benefits. Right. And the classic example, shall I relate the classic example in your real life?
Yes,
Have you
sir.
ever went to a medicine shop for purchasing a tablet or capsule?
Yes, sir.
And you must have asked that to the shopkeeper that can you please give me 4 tablets of this medicine, 4 tablets. But he must have told you, I can't give you 4 tablets. You have to buy the complete strip of 10 tablets. Is it
Yes,
happening
sir.
with you?
Yes, sir.
Yes. अपोलो फार्मेसी में आप जाओगे ना, आप उसको बोलोगे 4 टैबलेट दे दो, कहेगा नहीं 10 का पत्ता आएगा. Right. So Apollo Pharmacy will tell you that we are not selling the loose medicine. If you have to buy, you have to buy a complete strip of 10 tablet. So what is the future economic benefit you are expecting? 4 tablet or 10 tablet?
Only 4 tablet.
Only 4
Only
tablet.
4 tablet.
But how much you got?
10.
10 tablet.
10.
10 tablet. So you will eat 10 or you will eat 4? You will eat
Only
4.
4 only.
Only 4. So likewise, the contractual or legal right is 20 years, right? But not necessarily the entity is expecting the future economic benefit for 20 years. So the useful life of the intangible asset can be shorter than the contractual or legal right. But government has given for 20 years and Bharti Airtel is expecting that I can get the benefit for 25 years. Can the useful life be 25 years?
No.
No.
No, sir.
It cannot go beyond. It cannot go beyond. Okay? It cannot go beyond. Yes. Is that clear?
Yes,
Clear.
sir.
Very much clear?
Very much clear.
Yes,
ये
sir. Very
टैबलेट
much clear.
ये टैबलेट आपको याद रहेगी नहीं रहेगी टैबलेट?
याद है सर, याद रहेगी.
याद रहेगी टैबलेट?
Yes, sir.
Swaminathan, will you
We will
remember
not-
this tablet example?
Yes, sir. Definitely. It is a very great example, sir. I really appreciate the example. The way in which you are giving the examples is really, it's no inspire. Thank you so much, sir. Lovely.
Real life example.
We don't have to eat the remaining 6 tablets. That we have to remember.
Yeah. So useful life of the intangible asset. So useful life is driven by contractual or legal rights. Okay. It shall not exceed the contractual or legal period, but the life may be shorter than such contractual or legal period. For example, Government of India has given a mining right to X Limited for a period of 10 years. X Limited is expecting future economic benefit for a period of 5 years only and expecting to use this right for 5 years. What is the useful life in this case? Contractual life is 10 years, but the useful life is 5 years. Okay.
5 years.
Useful life could be finite life, could be indefinite life. What is meant by finite life? When the life is known, when the life is identifiable,
Known.
right?
Okay.
So when the life is finite, life is known, then life of the asset is determined and you need to amortize. You need to amortize your cost divided by life. Cost of license is 10 lakh. Life is 10 year. Amortization is 10 divided by 10, 1 lakh. But
1 lakh
what
per annum.
happens? But what happens when there is an indefinite life? What is the meaning of finite life and indefinite life? Finite life means you are expecting a future economic benefit for a certain period, for a finite period. What is meant by indefinite life? Indefinite life means the entity does not foresee that the future economic benefit will be available for how many years? Like goodwill, right? So friends, in accounting standard, in AS 26, in case of indefinite life, there was a rebuttable presumption. You know what was the rebuttable presumption?
No, sir.
So rebuttable presumption means general presumption. That if you don't know the life, जैसे आपने एक business acquire किया, you have acquired a business and you have paid consideration which is more than the value of the net assets. So where the difference will go? If your consideration is more than the value of the net assets, where the difference will go? Goodwill?
Goodwill, sir.
Goodwill. So you are not expecting that this goodwill will give you future economic benefit for how many years? So accounting standard says that in case you don't know the life, so take the life as 10 years. But Ind AS does not have such concept. Ind AS says that if you don't know the life, then do not amortize, right? So if there is no life, will you be able to amortize?
No, sir. We cannot
Yes.
determine the code.
Amortization is cost divided by useful life. You don't know the useful life. It is infinity. So friends, if entity does not foresee that future economic benefit will be available for how many years, then entity should not amortize, but entity is required to do the mandatory impairment testing every year, right? So entity has to check every year while amortization is not there, but whether impairment is there. So entity need to check the impairment. Okay. And entity will review every year whether now the life is determinable or not. For all the assets which is indefinite life, entity will check at the end of every year whether now the life is determined or not. For example, goodwill. So the entity need to check at the end of every year that am I certain now that for how many period I will be able to receive the future economic benefit. Okay.
Okay.
Is that clear?
Yes, sir.
Yes, sir.
Very much clear?
Crystal clear, sir.
Crystal clear. Very good. So example of indefinite life. Let's discuss this example also. A Limited acquired a business and capitalized a goodwill of rupees 1 lakh. At this juncture, the company is not able to determine the life of the asset in which it will receive the future economic benefit. At the end of year 2, the recoverable value is 70,000. In the beginning of the year 3, the company was able to identify that the remaining life is 5 years. So the value of the goodwill is 1 lakh, right? At the end of the year 2, recoverable value is 70,000. At the beginning of year 3, the company was able that the remaining life is 5 years. So what is the accounting treatment? क्या करेंगे? Cost of goodwill 1 lakh. Will you amortize in the first year?
No, sir.
Why?
Because that time is the infinite life.
It's an indefinite life. Amortization period is not available. Amortization is not possible as the life is not determinable. Carrying value 1 lakh. Amortization in second year 0. Impairment loss. Why impairment loss will come into picture? Why? Because
Sir,
recoverable value is 70,000. So there is a 30,000 rupees of impairment loss. Now at the end of year 2, your value is 70,000. And now you have estimated the remaining life also over which you will receive the future economic benefit. What is the remaining life? 5 years.
5 year.
5 years. What is the depreciation every year? From
14,000 per annum.
14,000 per annum. Now life is determined, hence the asset needs to be amortized. Okay. Clear? Is it clear or clear?
Clear, sir. Crystal clear.
Crystal clear? Very good. So let's again go to the PowerPoint presentation. We discussed this concept. Useful life of an intangible asset, finite life, indefinite life. Yeah?
Yes, sir.
In case of finite life, amortization required. In case of indefinite life, only impairment testing is there, and you need to review every year whether the life becomes finite or not. Right? Now, what is the meaning of amortization? It is same like depreciation. What is the meaning of depreciation? Depreciation is a systematic allocation of depreciable amount over the useful life. What is meaning of amortization? It's a systematic allocation of depreciable amount or amortized amount of intangible asset over the useful life. Okay. When depreciation will start? When the asset is put to
Available for use.
available for use. Put to use nahi, available for use. Put to use concept is in income tax. In Ind AS, an accounting standard, the concept is available for use. So when the amortization will start? When the intangible asset is
Available.
Available for use.
And when it will stop? When the asset is derecognized, disposed of, or when it is classified as held for sale under Ind AS 105. Okay. Now, what are the three methods in amortization? कौन से तीन मेथड बताए थे डेप्रिसिएशन के?
SLM, WW, unit of usage method.
This is the same slide which is there in Ind AS 16. SLM, straight line method, written down value method, and unit of production method. And how you will apply these methods? On the basis of future economic benefit. If your future economic benefit is constant, then which method you will apply?
SLM.
SLM.
If the future economic benefit is declining trend, then
WDV.
WDV.
if the future economic benefit depends on the usage of the asset, then
Units of production method.
unit of production method. In straight line method, your depreciation and amortization charge is constant. See, I am using the word depreciation also in between. Why I am using this word? Just for your revision. Just for your revision. So that you will be able to know that these concepts are same only except the change of the word. Okay. So SLM means there is a constant charge of the depreciation and amortization. WDV means initially the depreciation is higher, amortization is higher, and subsequently this depreciation amortization will go lower. Unit of production means it will be depending on the usage of the asset, unit of the usage. So whatever units you will use, you will depreciate or amortize as per the units used divided by the total expected units, divided by the total busted units. Okay. Change in method of amortization, is it a change in policy or change in estimate?
Change in estimate.
It's a change in estimate. It has to be applied prospectively. It's a change in estimate, right? So change in life of the intangible asset, is it a change in estimate or change in policy?
Estimate.
It's a change in estimate. So change in useful life, change in depreciation or amortization method, it's a change in estimate. It's a change in estimate. Okay.
But only the change in cost model or revaluation model, it will be the accounting policy.
It will be a change in accounting policy, and this change in accounting policy is not required to be applied retrospectively. Why? Because the standard has told you that it has to be applied prospectively. Okay. The standard has given you. Example of unit of production method. Let's do this question. X Limited engaged in the business of manufacturing fertilizers, entered into a technical collaboration agreement with a foreign company Y Limited. As a result, Y Limited would provide the technical know-how enabling X Limited to manufacture fertilizer in more efficient way. X Limited paid rupees 10 crore for the use of know-how for a period of 5 years. So this technology X Limited will use for how many years? 5 years. And X Limited has paid what amount? 10 crore. 10 crore paid 5 years. Is it an intangible asset or not?
Yes, sir.
Yes.
Intangible.
Yes, it is an intangible asset because X Limited has paid for the technical know-how, right? Intellectual property, right? So X Limited wants to do this fertilizer manufacturing in more efficient manner, and that is why just to apply the technology in the manufacturing, X Limited has paid 10 crore for 5 years. And the production of fertilizer is also given in the units. 50,000 ton is produced in year 1, 70,000 in 2, 1 lakh in 3, 120 in 4, and 110 in 5. This is the metric ton in which this fertilizer was manufactured, was produced. Okay. At the end of the first year, it achieved its targeted production. At the end of the first year. At the end of the second year, 65,000 metric ton of fertilizer was being manufactured. So this is the expectation. These are the units. These are the expectation that these units are going to be manufactured. Okay. These units are going to be manufactured. Now, question is, in this case, whether this 10 crore has to be amortized over a period of 5 years using SLM or WDV. WDV will not be appropriate, whether SLM or unit of production method.
The unit of production method.
Unit of production method.
Unit of production method will be more appropriate because this technology is used for production, right? And the way the production is happening, so it has to be amortized in that manner, right? In the year 1, 50,000 units were produced, and this is the total expectation. This is the total expectation, right? So what is the amortization in the year 1?
50,000 upon total.
50,000 divided by the total, multiply by 10 crore, right? This is the year 1. In year 2, instead of 70,000, it has achieved 65,000 ton, and the estimates have also revised for next 3 years. Like 120 and 110, it is 85, 105 and 115 now. So what you will do now?
So we will allocate the based on that 65,000, 80, 105, 115. We will total it, and we will reduce the 1 crore, 100 crore value from the first year allocation, which means the 50,000 divided by 450,000. The remaining value will be allocated to based on that production unit.
Simple, very simple. You will compute what is the closing WDV at the end of the first year. Closing carrying value, right? Carrying value at the end of the first year. Whatever is the carrying value at the end of the first year, it will become the opening value at the beginning of the second year, right? Now you got the value, you got the intangible asset value. Now you need to amortize it over how many years? Over 4 years.
4 years.
But we have applied unit of production method, right? So whatever is the closing carrying value at the end of the first year, that has to be amortized over the revised estimate of what? 65,000 plus 85 plus 105 plus 115. That is the revised production in the next 4 years total. Okay. So whatever is the closing carrying value, multiply by 65,000 divided by remaining 4 years ka total, that will give you the second year amortization. Correct? Sahi hai na?
Right. Yes, right.
Do you agree with this, na?
Yes.
So how this company how this answer is given in the study material, let's read that. So unit of production method is suitable in this case. The total estimated unit to be produced is 45,000, 450,000 metric ton. 4 lakh, this is 10 is missing, okay? 450,000 metric ton initially, right? And it has to be amortized in the ratio of the total production. The first year charge will be 50,000 divided by 4.5 on 10 crore. It is 1 crore 11 lakh 11,011 111. At the end of the second year, the revised estimate, the total number of units to be produced in future is 65, 85, 105, 115. And what is your opening balance at the beginning of the second year, 10 minus this. ये तो क्लियर है ना? 10 करोड़ में से 1 करोड़ 11 लाख को कम कर देंगे, मल्टीप्लाई बाय 65 डिवाइड बाय 370. That will be the amortized balance. That is the amortization for the second year. Third year again you will compute like that only. Right? Is that clear or not clear? Tell me.
Clear.
Very much clear?
Yes.
Yes. So intangible asset, indefinite life we have already discussed. Retirement and disposal. So friends, you need to derecognize your intangible asset when it is disposed of, when it is sold, or when no future economic benefit is expected from its use or disposal. Right? If there is any gain or loss, where the gain or loss will go?
P&L.
Gain or loss will go to P&L. Gain or loss will go to P&L. Okay, will go to P&L. Right? Okay. Yes, it will go to P&L. Right? Okay, so friends, it will go to other income, other expense. So friends, we have completed intangible asset standard. Now the time came for revision. The time has come for revision. Friends, what we have discussed today? Today we have discussed the intangible asset by way of internally generated intangible asset, how it is going to be measured. Friends, internally generated intangible asset has to be bifurcated into two phases: research phase and development phase. Research phase and development phase. If it is a research phase is like acquisition of knowledge, development phase is a application of knowledge. The amount incurred in research phase has to be debited to P&L as an expense, but the amount spent in development phase has to be capitalized, okay, as an intangible asset. If the company is not clear on the research phase and development phase, the company needs to treat that phase as a research phase. Or even if the company has wrongly recorded any expense as a research phase, the company will not correct it in the future period. Friends, when the development phase will be established, when 6 criteria will be satisfied. And what were the 6 criteria? Thieves of the ocean, pirate. Future economic benefit is probable, cost can be measured reliably, intention to complete the asset should be there, technical feasibility must be there, ability to use the asset must be there, right? If these conditions are satisfied, then you can say that development phase is started. Then we discussed the subsequent measurement. Intangible asset has to be subsequently measured on the reporting date at either a cost model or a revaluation model. If you have opted for a cost model, you need to compute your carrying value by original cost minus accumulated amortization minus accumulated impairment losses. If you have opted for a revaluation model, you have to state it at fair value. And fair value means revalued amount minus subsequent accumulated amortization minus subsequent accumulated impairment losses. Friends, whatever model you have to apply that model consistently on a class of asset. Means if you have applying a model on a particular asset, the same model needs to be applied to all the assets within the same class. Okay. But if you have opted for a revaluation model on some assets, but on few assets within the same class, you cannot. Why? Because the active market does not exist. In that case, you can continue on those assets with a cost model. In case of a cost model or a revaluation model, how you should compute your amortization, it has to be opening balance, means carrying value of the intangible asset divided by the remaining useful life, right? So friends, if you have opted for a revaluation model, either there could be a revaluation surplus or impairment loss. When there is an increase in the value of the asset, your asset will be debited and revaluation surplus will be credited in other comprehensive income. If there is a decrease in the value of the asset at the first time, your asset will be credited and impairment loss in P&L will be debited. Okay. Friends, if there is an initial increase and subsequent decrease, so first you need to adjust the decrease with the revaluation surplus. If the decrease is beyond revaluation surplus, then that extra portion will go to P&L as an impairment loss. Vice versa. Initially there was a decrease, subsequently there was an increase, right? So to the extent of decrease has to be reversed in the P&L. If increase is beyond decrease, then The extra will go to revaluation surplus. Friends, revaluation surplus has to be utilized by way of transferring it to the retained earnings. At the time of derecognition, the entire amount of revaluation surplus has to be transferred to the retained earning. But if company wants to use the revaluation surplus during the life of asset, the company can use. It is not mandatory, but if the company wants to use, the company can transfer the revaluation surplus to retained earning to the extent of extra amortization on account of revaluation. Okay, friends, then coming to the life of the intangible asset, the life of the intangible asset can be finite, can be indefinite. If the life of the intangible asset is finite, you need to do the amortization. If the life of intangible asset is indefinite, you need to check every year whether the life becomes certain or not. Life का मतलब क्या है? What is the meaning of life? Life means for how many years you are expecting future economic benefit, right? And if the life is indefinite, you need to charge impairment. You need to check the impairment on that intangible asset. You need to do impairment testing, right? So friends, the life of the intangible asset is equal to contractual or legal rights. The period over which the contractual or legal rights are there. But friends, the life cannot be beyond contractual or legal right, but it can be shorter than contractual or legal right on account of having a future economic benefit period lesser than the longer period, contractual period, because of the 4 tablet into the strip of 10 tablet. Always remember that, right? Then we discussed that the amortization method. So amortization method is a systematic allocation of amortized amount of intangible asset over the life of the intangible asset. Amortization will begin when the intangible asset is available for use. Amortization will stop when intangible asset is derecognized, disposed of, or when it is classified as held for sale, right? So there are 3 methods of amortization: SLM method, WDV method, and unit of production method. These methods are applied on the basis of expectation of future economic benefit. If the future economic benefit is constant, you have to apply SLM. If it is declining, you have to apply WDV. If it is on the basis of usage of the asset, you have to apply unit of production method. Okay. The change in amortization method is a change in accounting estimate. It has to be applied prospectively. Okay. And the change in useful life of the intangible asset is also change in accounting estimate. It has to be applied prospectively. Okay. Friends, then we talked about the retirement and disposal. So your intangible asset has to be derecognized when it is disposed of, or when it is the future economic benefit is not probable. The future economic benefit is not expected. This was about the entire concept of intangible asset. Friends, cost model, revaluation model, purchase cost, right? Recognition criteria, amortization method. So this is largely similar to PPE. When you are reading PPE, then you will have a revision of intangible asset also. When you are learning revising intangible asset, you will have a revision of PPE also. My recommendation to all of you, whenever you prepare notes, whenever you do revision, whenever you pick PPE, then talk about intangible asset also. Whenever you do the revision of intangible asset, then think and talk about PPE also. Okay. I hope you found this 2 days session on intangible asset useful. I hope you found this revision useful, layman language examples useful, board of studies material, illustrations useful. I hope you guys can gain up confidence on intangible asset after this class. Yes,
Thank you, sir. Yes, sir. We have gained a lot.
Okay.
Yes, sir. It will help a lot for us.
Great. So thank you so much, friends. If you have any question, I would be happy to answer. If not, then we can call out the session. Do you have any question? Any question?
No, sir.
No, sir.
Udandam, Leela, Chitra, Neha, Vibhu, Mamta, Saminathan, Dilip, Akshay, Saurabh.
Not yet, sir.
Not-
If there is, it will be. We will discuss tomorrow.
Sure. Thank you so much, friends. If you don't have any question, thank you so much. Have a great day. And please do the revision. Please do all the questions of the study material, right? All the illustration you need to solve. The answers are given in the study material. If you found any challenge in any question, you can reach out to me. You can write it to me on my email ID cascsalokgarg@gmail.com, right? cascsalokgarg@gmail.com. Okay. Thank you
Okay,
so
sir.
much. Bye-bye.
Thank you.
Take care. Thank you.
Okay, sir. Thank you so much, sir.
Thank you.
Your examples are very great, and your teaching style is very easy to understand. And it's overall, it's very good, sir. Super. Thank you so much, sir.
Thank you, Saminathan, for the feedback. Thank you so much. Bye-bye. Take care.
Thank you, sir.
Yeah.
Thank you, sir.
Thank you. Ashok ji, session over.